It's a great example. You can have big losses held in structures that aren't fragile, and that happens all the time. That's how the financial system should work. But I do want to ask you, are you going to buy any of this convertible debt? Here's debt that Tim Geithner at the moment's notice can say, oh, Steve, sorry, you get worthless equity. You're presuming that debt will be out there and lots of it.
There are two things.
Hopefully, would have a hard trigger, not
the trigger. I mean, the devil is in the details of the trigger. Was it who issued? One of the UK banks issued this.
Barclays issued it.
It is the hot idea at the moment. Yes.
Yeah. Barclays issued it. Rabobank is thinking of issuing something like this. You need a hard trigger. You're absolutely right. It can't be based on regulatory authorities.
But over time, if this works and it reduces the likelihood of runs, of course it becomes less expensive because the likelihood it gets triggered becomes less and less. But the devil is in the details. But I'd sure like to be working on, I'd rather be working on that than working on some of the other things that are in that bill.
But Adam, you bring up Simon Johnson's point about big banks. But remember, all the complaints during the Depression was that the US had too many small banks. Yeah. And there were too many failures because all these banks were undiversified. I mean, there are some benefits of big banks. Yes, there's some terribly mismanaged big banks, but there's some well-managed banks, and there was, to some extent, a flight to quality towards big banks. I'm very worried about picking one word and saying this is the problem, and let's tackle that problem. Let's cut these 13 banks to size. I would more focus on where things went wrong and whether we can straighten that out.
And it was AIG, right? The big loser here is not a bank. That wouldn't have been touched by this. And Fannie and Freddie.
So I'm told we have time for one last question. It seems like the back is much more inquisitive than the front. I wonder what that tells us.
All right, Shep Pryor. My question is, explain Canada. 6 banks, all of them have 10% or more of the deposit base. All of them are too big to fail. What lesson is there?
They
own a lot of gold, have a lot of gold and diamonds.
Their mortgage laws, I think you had to have 80% loan to value. You couldn't have more than that, so you didn't get the subprime that you got here. And I think their capital requirements were a good deal higher than in the U.S. Raghu probably knows better than I do.
Live next to the U.S.
No, I think that's a very good point. It was the same thing that was brought up in the 30s, right? Canada, again, didn't have the bank failures. And then, of course, it was the poster child for the United States. We need big banks. Now, because the big banks are in disfavor, Canada is no longer an appropriate example. But as you said, that's a situation where with appropriate regulation, you can live with relatively big banks. We need to understand the lessons a little more carefully. What did Canada do differently? And did it have to deal with the same set of circumstances?
But it depends.
But it certainly was a good starting point.
But it depends on the objective again, right? Canada came out much better through the crisis, but we need to take the totality of what's happened over the last 40 or 50 years and compare, the Canadian system versus, say, the U.S. system, right? I mean, I don't know the answer.
Pretty well.
No, it has, but I don't know the answer on every dimension you'd care about, right?
So we also need to think harder about failure and why we fear it so much. Right? Let's remember, bank failure does not mean there's a crater where there used to be a bank. And especially in today's market, I mean, when Lehman failed, most of the operations, 3 days later, they put another sign up on the window and they're up and running. The problems in the Great Depression was that when little local banks failed, the people who knew how to make loans were out selling apples. Now in our financial system, when banks fail, the knowledge, the ability to make loans doesn't necessarily disappear. So one of our objectives should be to make bank failure even easier. And let's not forget, it's not as impossible as you think. A lot of what happened in our financial crisis was not so much bank failure as a flight to quality, the huge demand for cash, not particularly involved in the failures of the banks itself.
Great. Well, I think this has been a fabulous panel. Thank you guys very much. I'm trying to come up with a concluding sentence that I want to see if I can come up with one that you'll all agree with. And it's something like this. There's a lot of knowledge, a lot of data and theory-based knowledge about the financial system that actually could come out of this crisis and make our system, the world system, safer and more prosperous. And nobody with any power is paying any attention to it. that.
Or not enough attention. Let's put it that way.
Yeah, okay, great. All right, well, thank you guys so much. Thank you for fascinating.
Thank you.
All right, thank you. Thanks, Adam, for, I don't know if I should say moderating, guiding, or at least getting us through. And thank you to each of the panelists, Steve and Raghu, and Toby and John. John, I know you put a lot of effort into thinking about the content of this, and especially Cliff, thanks for coming in. You're the professor of practice. We appreciate you joining us. To all of you, we have 8 terrific panels that way, some of which you've signed up for, and therefore they're sold out. I'm not going to go into the details, but they start at 3:15, which I think gives you about, well, a good 45 minutes or so to mingle. Am I right on that? Okay. I don't know what you're here for, so. Okay. All right. That's it. John.
Okay, before I know as the afternoon goes on, first, I'm John Edwardson. I'm the chairman of the council of the Booth School of Business. And I know that many people have to take off at different times during the day, and there's no way, Ted, that I'm going to let you go out of here without a standing ovation. We all really appreciate all that you have done for so many years. This school has been incredibly successful. You have set new goals and new achievements in every area you've attempted, and the person who follows you is going to have a lot of difficult records to break. But I just want to thank you so much for all that you've done, and I know that everyone else will as well, so thank you.
Thank you very much.